So a common question that we get asked in the syndication space is how do our limited partners get paid? Want to elaborate on that?
Yeah, so the first main way is upon purchasing the property, and enacting the business plan. There's obviously going to be rental income, and so we're going to distribute that typically quarterly, which would be a preferred return, typically in the 7 to 8% range. And a preferred return is essentially
So a preferred return is the limited partners being paid before the general partners can take any money. Your general partners are the people that put the deal together. Your limited partners are your investors that usually bring the capital, right? So we make sure that our limited partners get the 7 to 8% quarterly before the general partners can pull any money.
And rental income beyond say 7 to 8% is typically going to be split in a variation of ways depending on what the deal has to offer from a return standpoint, which could be 50-50 between the limited partners and general partners. It could be 70-30 again depending on the deal. Now, again, with us looking for these value add opportunities, what that really means is that we're increasing the value of the property by driving the net operating income, which is the bottom line. And so, in doing that, we're able to access the equity that we're creating, whether that be through a cash out refinance or a sale. Now, if we go the cash out refinance route, we're able to return a significant amount of investor capital, if not all of it. And if we're able to do that, that obviously boosts the cash on cash return of the overall deal, as well as, the return for our debt investors. And to take it a step further, once the hold period is complete and we move to sell the property, again, we're going to be able to tap into that equity that's going to be passed on to our investors. And the split, will differ deal by deal. But again, to yield the desired returns for our investors, we'll determine that, whether that be a 50-50, 70-30, so on. So that's really the breakdown of kind of the three ways that investors get paid.
Now, do we have a targeted internal rate of return for our deals?
Yeah, so typically, again, we're at the 7 to 8% preferred return, and our overall deal internal rate of return is going to be a minimum of 12% targeted. And so that's really what we're after for our investors.